Good morning. Can you hear me?
Good morning.
How are we doing? Audio good? Audio good? Good morning, everyone. Aiden, Bob, Florine, Josh, Parker, Sarah, Terry. Early worm. What is it? Early bird gets the worm.
That's right.
Sunday, 10 a.m., February 25th. Glad to be here. Glad to be here. Bunch of fun stuff to talk about today. Hope everyone had a good week. Ron John, see you popping in. How's everyone
Sunday.
doing? Happy Sunday. Beautiful day here in Florida today. It's around 70 degrees and sunny. I would keep my window open, but then it brings light to the camera and it's hard to see. But I hope everyone had a very good weekend. All is well. Very interesting week in the markets we had this week. I guarantee you it will be just as interesting going into next week. Any fun things that anyone did this weekend? I went biking. I biked 27 and a half miles trail riding yesterday.
Wow.
So my legs are feeling it today, but it was fun. Short distance. Yeah. Uh-huh. It was 27 and a half more miles than you did, Parker. Very cool. Piano recital. Awesome. Well, good luck to her. We'll give it just a couple more
Thanks, man.
minutes. Then we'll get into it. A lot of fun stuff to go over today. Yeah, Florida's awesome. Florida's awesome. I'm definitely going to miss it when I'm gone. But I'll be coming back every other couple months. I've got too much ties here to move and not come back, so I'll come back and forth, especially when I get to scratch that itch to go to the beach. I've got friends that are always going down to the Keys and stuff for summer. Our big thing is late July. We always go down and go lobstering in the Keys, so that's something that I'll always try to come back for. But
That's so fun. I went on a
yeah.
sailing trip doing that once.
Oh yeah.
Yeah, it's a blast.
We'll
Alan, good
start it in
morning.
just a minute.
Parker sailing is peak experience. Yeah, it's a lot of fun. It is. It's cool.
Good morning, Arish.
Lacha, where's that? 3 weeks before
Yeah, the
November,
Hurricanes.
oh man.
Fort
Myers.
like yeah. The Hurricanes are a real deal. I've been blessed enough to, I live in Central Florida, so usually by the time the hurricane gets to me, it is usually not as bad as when it first hits land. So, yeah, that's
Sailing in
something that
Amsterdam.
hurricane insurance is a big thing. All right. Do we want to give it a couple? Yeah, let's go ahead and get into it. Let me wet my whistle, as Michael says. All righty, news for this week, everyone. Ricardo, I just saw you pop in here. Hello. Alrighty, news this week. The week ahead, we've got February 26th through March 1st. So we are going into monthly close. Now, please note, though, that there is not an NFP this week. It will be next week. So just keep that in the back of your mind. Even though March 1st is Friday, the unemployment claims will be next week. So with Monday, we've got 10 a.m. new home sales being released there. That's an orange folder. So really, not a whole lot of news on Monday. On Tuesday, At 8:30 a.m. for pre-equities, we've got durable goods orders month on month and core durable goods orders month on month. At 9 a.m., but again, pre-equities open, we have an S&P Composite 20-year HPI yearly on yearly. And then at 10 a.m., post-equities open, we've got consumer confidence and a manufacturing index there. So we do have a little bit of a jam-packed Tuesday morning there. Wednesday morning at 8:30 a.m., we have a prelim GDP quarterly. We also have the price index of that GDP quarterly on top of that at 8:30. That is pre-equities open. It's good to note if and when a news event is before or after that 9:30 equities open. We also on Wednesday have G20 meetings, so that's going to be tentative all day. So Wednesday will be a volatile day relative to the entire day. Those G20 meetings are where all of the global entities kind of meet and go over economic forums and stuff like that. So that'll be tentative throughout the all day on Wednesday. Thursday, more news. 8:30, you have core PCE price index monthly, and on top of that, you have unemployment claims. At 9:45, just after equities open, you have the Chicago PMI. You also have at 10 a.m. pending home sales. You also have another tentative day with G20 meetings taking place there as well. So Wednesday and Thursday have G20 meetings. They should be pretty volatile days just throughout the entirety of the day, not just specific time windows. And then also in the PM session, you have a FOMC member, Mester, speaking as well at 1:15, right ahead of that 1:30 p.m. session kind of opening. And then Friday, we still got news on Friday. Also, we do have ISM manufacturing PMIs, and you have a revised consumer sentiment as well, and then ending it with a manufacturing price release also. So a lot of news this week. Nothing too crazy though, nothing outstanding. There's no CPI, there is no FOMC. There is no NFP this week, so it should be a very cool week to trade. How that aligns within your trading plan and what days you want to choose to trade are totally up to you. Everything should be kind of open for grabs, so that's good to note as well. Any questions, comments, or concerns on the news before we get into it? Any questions, comments, concerns on news before we get into it? All good there? Perfect. Okay, so we will go ahead and we will go into dollar. And I'm not going to spend too much time on dollar because I want you guys to just I want to focus on indices for the most part. But basically, something to note here, if you've noticed, I posted some analysis of it this past week in my room. But really, just a couple things to note. Obviously, we're delivering off of this monthly consequent encroachment, right? So we've got this SIBI in here, right? You can see right here. We have the SIBI, and I'm noting this consequent encroachment over here. You can see all the things that I'm annotating. So that's where we have formed our high on dollars so far. But really, when you go into the weekly, we were watching to see if we could get closure above or below this BISI. You can see that we did overstretch it a little bit, right? We could potentially be using this as a breaker or a form of mitigation, but we closed back above the weekly BISI, right? So that's something that I am noting, right? There was closure back above the weekly BISI, but there was no displacement on either side of the market when we get to the daily, and I'll note that. But really, my main focus on the weekly is noting that we are closing back above this weekly BISI, right? We fully filled it, overextended a lot, created a pretty big mohawk there, but really closed back above it, and that's all we needed to note there. On a daily, that's where I can start to see something, but really at the end of the day, you have to note there's no displacement, right? And for dollar, I'm not really giving it any weight within my mental capital with regards to where it's going to go until I see displacement, right? So if you want to also look, we've noted this before too, right? We noted the monthly open, right? So the monthly open is going to be key with regards to how the power of three plays out. And you can see how we were sensitive there, right? We just went and touched the monthly open, came all the way back and closed back above the consequent encroachment and really right at the opening in the high end of this weekly BISI. So price could obviously continue based on the closure that we've had on the weekly and daily. Price can continue to go higher, but there has been no displacement, right? There has been no displacement here on a daily. And so I'm not necessarily too keen on the fact and weighing in on the fact that we could go higher or go lower until I really see displacement, right? Because we are still delivering off of that higher time frame area of that premium array being the monthly SIBI, more so the consequent encroachment. We do have a volume imbalance up here. We do have a volume imbalance right here, so we can keep that to note. And then if we also want to note too, from this low to this high, price just delivered into a discount in here, touched this monthly open, and we did close right back at and a little bit above the equilibrium of it. So all price has been doing is just delivering into a discount, taking the internal sell side liquidity here, filling the entire weekly BISI, but still remaining to close at and above all of those levels. To me, that still shows a decent amount of bullishness, but there has been no displacement on a daily, right? So there was no SIBI that was created in here. So I'm not necessarily concerned with the idea that we're going to go lower yet. From here, I would say if I had to gun to my head, if I had to pick a direction, we continue to go higher, but I still do not have any daily displacement to provide me confidence in that. So keep that in mind. I'm noting previous month's highs, right? We've got January's high and we've got December's high, and I'm curious to see how price plays within that. You can even see on Friday, we had a small day, but we were able to test this monthly high again, revisit that weekly BISI, but still close back above it and the equilibrium of it. So gun in my head, I still see price going higher just based on what price is doing with regards to closure and how it's delivering from discount to premium and where it's closing within that range. But overall, there's still no displacement. Price will eventually displace one direction over the other. And when it does in the form of a BISI, or a SIBI, then I can start gravitating to a hard bias. But right now, I am still relatively neutral. I have a very soft bullish bias on this right now, and it's not necessarily correlating with regards to the indices as well as I would like it to. So I'm not really paying too much attention to, right? I don't need, just because it's not displacing anywhere and it's not giving me a clear sign of where it wants to go, doesn't mean it has to be a head case for me and I have to be stressed, right? I can continue to focus on the indices and the direction that they're going and not give too much attention to the dollar until it really proves to me that I need to give it attention. So from there, that's really the only thing that I'm noting here. We're in a weird point of price has been respecting discount for the most part with regards to the parent price swing that we're in from this low to this high, but we're delivering off of and coming off of a higher time frame premium array. So you're right there in the middle. We are in the middle of the range, and Michael talks about all the time, when you're in the middle of the range, it's not good to have some form of hard bias. So I'm going to remain on a soft bullish bias with the idea that we could displace in any way, and I'm going to let it displace in whatever way it wants before I can sit there and start to develop some form of hard bias. Does anyone have any questions, comments, or concerns here? That's really all I have on dollar. I'm not going to press it too hard, and I'm going to let it show me where it wants to go before I start to get any hard take on it. Does that make sense? All good there? Perfect, right? So you'll note too, throughout the year, if you've been following us along, if you were with us last year, there were times where we were super in depth on the dollar and we knew exactly where it could probably go and we followed it to those levels. And then there were also times where we let off the pedal and we sat there and we let it show its hand and we weren't sure where it was going to go and we didn't give too much weight towards it. And so we're at that point right now where we're letting it show its hand. We're not going to hold too much weight towards it. Once it shows it and it tips its hand to us where it could potentially go, then we'll start to get a hard bias and we'll start to get a target for where we could go with regards to liquidity or inefficiency next. Until then, we sit, we wait, we watch. We don't spend too much time trying to figure out where it's going to go. We don't try to fit a square peg in a round hole. We're going to focus on the indices, and then going forward, we'll wait. Other than that, that's about it for me. Henry, you want to go ahead and jump into the indices?
I will. Okay. So starting the monthly chart, both indices, we've still had the bullish order flow continuing on. As you saw last week on Friday, we made the high of the week and new all-time highs on both ES and NASDAQ. So still continuing with bullish order flow and no reason to really fight it at this point. But when you do look at your monthly charts, you want to acknowledge the inefficiencies that exist below and open yourself up to the opportunity that over the next coming months, it's not unrealistic to expect some sort of retracement. And so you want to see where price can return to if we are to see a retracement. On ES, when you look within this full price run right here, you can identify a few different inefficiencies. Okay, we have the BISI down here. and we have this inefficiency being created right there. Okay. On NASDAQ, you have a deeper discount one just like here on ES, and then you have the inefficiency being created here as well. Okay. So there's 4 days, 7 hours left in the monthly candle, and we want to get, like we've been talking about for the past couple weeks now, we want to get an indication of if price could have that retracement in March based on where we get candle closure here. So ES is pretty well above the prior month's high at this point, and we could see price extend a little bit further. Still not too far off its high, only about 20 handles or so. So I don't think it's unrealistic for ES to continue working higher. Same thing with NASDAQ. NASDAQ could continue higher off of here, but we want to see in those 4 days and 7 hours, where does this candle close? Because if you get closure back below the prior month's high, it opens up a greater possibility, just given based on the proximity of where price is, and also the fact that it would be unable to close above the prior month, that we could return into the inefficiency below. So there's no fair value gap here yet. You have to wait for the third candle to close, because every fair value gap is a 3-candle structure. 1, 2, 3 candles. Okay, there's your fair value gap after this candle closes. But if you close back below the prior month's high, then it opens up the idea for price to return back into inefficiency below. So we're thinking about it like that paint roller. It's rolling up, coming back to inefficiency, and then continuing to roll up. Okay. So we can drop down from here into the weekly chart. I'll just drop these down below so we can see those on the weekly. And then I'll go into weekly charts on each of these. Okay, so there's that monthly inefficiency there. Oops. And again, it's not a fair value gap yet, but just recognizing that there is inefficiency existing down there. On the weekly charts here, on ES and NASDAQ, we are still getting a bit of a difference between the two of them here as well, being that ES managed to close above the prior week's high. NASDAQ failed to do so. So NASDAQ has not been quite as strong in the recent price action as ES has, which makes sense in a way because NASDAQ had already reached to all-time highs before ES did. So ES was doing that six sister approach in a sense, catching up and reaching for the all-time highs, and now has seen a greater bullishness than NASDAQ has here. So when you look at the weekly timeframes, we can still have the same expectation that we've had in the prior weeks with ES continuing to work higher. Remember, we talked about how as long as you don't see closure below this inefficiency here on ES, between that high and that low, as long as you don't see closure below, we expected all-time highs to trade again. So we dropped into it here, returned up into there, dropped back down into a discount of the range, and then traded to all-time highs, never seeing closure below the inefficiency. Okay. So now if price is going to continue working higher, we want to see this down close candle here act as support in the following week. So you can see price return to that candle's high and the opening price there and continue working higher off of it. If it trades through and closes through the mean threshold of this candle, the likelihood is that you'll start to gravitate back into prior week's lows, back into this inefficiency. And if we're trading all the way back down here, then you have the monthly inefficiency below. So this next weekly candle should give a good indication of where price can head into March. If it trades down and uses this candle as support in a framework to continue trading higher, back up into buy side and all-time highs, then we can continue working higher. But if we're trading through it in the next week and closing below mean threshold of it, then we can start gravitating back down toward the monthly inefficiency. On NASDAQ here, we did fail to close above the high of the prior week, but we still have PDRAs that exist below. So we have the prior week's discount wick. We can look at the consequent encroachment in that. And we also have the prior month's high. Okay, this old high serving as a PDRA as well. So you want to see how that can potentially support a price move higher. I'll drop down into the daily charts now. And just note what new inefficiency has been created as price traded to all-time highs. So NASDAQ has gone and run the all-time highs right there. And ES running the all-time highs on Thursday, and then extending a bit higher on Friday as well. So you can see how ES has been significantly more bullish in the past month than NASDAQ has, continuing to reach up through those all-time highs on Thursday and Nasdaq did so on Friday and then closed back in the range. We now have inefficiency below on the daily chart. So this range here on the daily can be utilized to either trade higher, or if you're seeing closure on a daily basis back below the consequent encroachment, we can reach down toward the low end. And then if you see price work and close back below the low end, this price range can be used as inversion to trade back toward the sell side down here. And then we have this gray shaded area being that monthly inefficiency. So again, this week is going to give a good idea of where we can start to gravitate toward in March. You want to see if price is going to use this inefficiency here and trade higher into the later part of the week, there's a good chance we can continue working higher in the first part of March. Okay. But if we're trading and closing back in the lower portion of this, or even trading and closing back below it, same thing with ES, then we can start in March gravitating back down toward the monthly inefficiency. That will be below. Any questions here on the indices? So basically, as we get into the first part of the week, both on ES and NASDAQ, you want to be watching this daily BISI and seeing how do candle closures respect this inefficiency. Are we closing above the consequent encroachment or above the inefficiency in general? Okay, then we can trade back and create new all-time highs above the buy side. Are we trading and closing back below the consequent encroachment here and here? In that case, ES can work back down toward the volume imbalance here, and NASDAQ toward Thursday's lows in the last down close candle here. And then beneath that, getting closure below, we can use this area as inversion to trade back down toward the sell side and the monthly inefficiency. So you want to use the first few days of the week to see, is pricing using that inefficiency to trade higher, or is it not showing respect for this PD rate, in which case we can have, heading into March, a retracement back down toward the monthly inefficiency. Questions here on ES or NASDAQ? Sarah, all good? How are we feeling? Arish, all good? Kate, all good? Okay, good. All right, I guess we're all good. So work into the training exercise. Oh, Mauricio, when would you open a swing short trade on your paper account? I would need to see some violation first of a higher time frame array. So at the bare minimum, I would look for price to show signs of not respecting this BISI here as a discount array. So perhaps trading through, closing through the consequent encroachment. And then I'd want to see, at least on a 4-hour chart, some sort of displacement, a new SIBI being created as price closes below that. And then if we see price return into it and continue working lower, then I could have a swing opportunity off of that to reach back toward the sell side and the monthly inefficiency down. So letting displacement tell the story. And so far, the only direction we've seen displacement is to the upside. So I'm not looking to fight the bullish order flow. Yeah, you're welcome. All good, soothing, clear. Okay, cool. Jump into training exercises.
Let's do it.
Got some new submissions this week. New faces making submissions. Appreciate y'all participating in these. Person, you pulling them up?
Yeah, I got them.
Okay, there we go.
All righty. Let me scroll up here. Exercise 23. So the idea for this week is, if you are new, we just wanted you to utilize just a simple one-to-one risk to reward to identify whatever model you might be using. The only time restriction was Monday because we did have a big holiday. We did not want you guys to trade there. If it wasn't your first exercise, we wanted you at least to take a partial at that one-to-one and then utilize everything else as followed. If you wanted to hold a trade, you could. If you were obviously starting an account or you were in profit, risk 0.5%. And then if you win your first trade, stop. If you lose or go break even, then risk 1/4%. If you were currently in drawdown on the account, risk 1/4%. If you won your first trade, stop. If you go break even or lose your first trade, risk another 1/4%. It's pretty self-explanatory there. So first trade, Mr. Professional Trader, trade one, the context for the trade, anticipated that the market will go to the breaker with forming a 15-minute fair value gap since we have the lunchtime liquidity run, but that did not happen since the morning move was made to be an inefficiency that could not be filled in the AM session. Mistakes. Wanted to take the trade for the sake of taking it, not really waiting for the setup. Usually I will wait for the PM session. Since I missed the morning sell-off, I took a trade with FOMO. So you can see in here, right, he was just utilize. It looks like he was just utilizing the fair value gap in here and putting the stop at the consequent encroachment of this wick with a looks like a little over a 101 here. Couple things to note here with regards to that, right? And this is just going to be, you know, the outlier here is just wanting to take a trade for the sake of trading, right? That's not what these exercises are for, right? These exercises are to not just take trades. They are there to really try to understand your trading. And that takes patience, and that takes overall waiting for what you really want, right? What did you really want? Like you said, you're not really waiting for your setup. Usually you wait for the PM session. You should have waited for the PM session, right? So that's one thing to note. I'll also note too, with regards to submitting the trade, you know, the more context you give us, the better we can break things down. But, you know, if you're looking here, and I believe this was on the 20th, so this was on Tuesday, right? You know, if there was one thing that we were talking about too, you know, is on a bank holiday, another thing is not only do you want to stay away from the bank holiday, but you also want to stay away from the day after the bank holiday, right? So allowing the week to show you a little bit more of what template it might use, right? We try to understand that weekly template, and we weren't able to understand that weekly template until after Wednesday, right? So once the Wednesday candle closed, we were kind of in the idea and headspace of, okay, we might have a Wednesday low of the week. We could start looking for long biases, right? So not allowing yourself to see what the market wants to do and continuously wanting to wait is going to hurt you, right? Just the idea of being impatient and wanting to take a trade for the sake of wanting to take a trade is going to hurt you, right? Just because same with the trading exercise. If you just go and get a funded account, or you're just now starting with a funded account, it's the same idea, right? You're going to be in this headspace of, I want to take a trade, I want to take a trade, I want to take a trade. And that's not what you should do, right? You should fight that FOMO, right? Would you rather miss a trade or lose a trade, right? So, you know, yes, there were trades that you could have capitalized on Tuesday or Wednesday or whatever the case is, but really you're hurting yourself with taking that mindset of, I need to get in the market, I need to be in the market, I'm going to miss something, right? So switch your mindset from that chaser's mentality to allowing the market to come to you within certain criteria, right? Do you have a certain criteria? Do you have a certain time of day? Do you have a certain time of session? Do you have a specific detailed approach in which the pattern that you're trying to recognize in the market, does it make sense? Are all things clear? If they aren't, you should not be a participant in the market. Henry, do you have anything else you want to touch on this?
Yeah, I think just technically speaking, and we might have touched on this in the live stream that morning as well. I believe where price is coming off of before you took your entry here is price is just making a retracement into a 30-minute SIBI up there. So you want to be continuing to follow the displacement and allow for that to tell you where the order flow is heading. So if you go into lower time frames, like it looks like you're on a 15-minute here. So if you're in a 5-minute or a 4-minute or something like that, you may be able to participate in a long for a retracement up to that 30-minute SIBI. But after price is leaving it already, and you can see too how it hit the consequent encroachment of some inefficiency that you have marked there. That might be an old daily BISI or something. And then starts trading back down off of there. A good thing to do here would be allow price to return into that inefficiency and then see if you see a new displacement off of it. Because otherwise, you can very well just be continuing the order flow back toward the downside from that 30-minute SIBI above. And so just technically speaking, watch for the highest time frame inefficiency and how is price trading off of there.
And I'll note too, on the 15-minute, notice how price pushed up into the daily volume imbalance that you marked out, and look at how it respected it, right? Price pushed back up into here, close back below it, from that moment on too, you want to be able to see, yes, is price when it's creating this high right here, is it pushing into a higher time frame form of inefficiency? In the case, this would have been like a 30-minute civvy, and then delivering lower. If you're going to want to go long on that, you're going to want to see price close not only back above this daily volume imbalance, but you're going to want to see, is that higher time frame order or displacement in the form of a civvy? Are we trading back and through that, right? Because you can see that we're just trading into it and then going lower, and price has no willingness to close inside of the civvy or inside or above the daily volume imbalance. We're just touching it, referring back to that higher time frame civvy, and then going lower, right? And I would also note too, especially on this time frame, right, there's no market structure shift. There was no high that was taken, right? We were just actually in the form of making a lower swing high with the form of the displacement.
Your mic cut out, Carson. Can't hear you.
Can you hear me?
Just give 1 minute.
Okay, sorry about that.
Yeah, you're good.
But I would say with regards to that, you want to note, okay, is price giving me some form of idea to understand, do we have a change in character, right? Do we have a change in state of delivery? And if there's no high that has previously been made, right, then you're basically saying, okay, I'm going into this trade long with the idea that we could maybe break structure and break this high, but there has been no high that has been broken. So you want to keep that in mind too, right? This is a very high risk buy. And yes, price could come back and fill this inefficiency right here, but why did it not? Because it was delivering into a higher time frame one that was already inside of this area. Just keep that in the back of your mind too. But you'll get it overall. I think the main takeaway, outside of the technicals, is understanding why you got into the trade, right? And I think the reason why you got into the trade was simply because you wanted to take a trade. And that's not the way we approach the markets, right? We need to approach the markets in the mindset of, what is my criteria, and does the market fit my criteria at the moment? If it does, then I can figure out a way to potentially capitalize. If it doesn't, I will continue to be patient. Patience always plays. The more patient you are, you will never, ever, 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 ever get hurt in the market by staying patient. The market will always be more patient than you. And so you need to start to practice that patience, right? You don't just wake up one day and have patience, right? You need to practice the patience. When you feel as if you have the emotions of wanting to take a trade, you need to fight that and really understand, why am I wanting to take this trade? Is it because it fits all my criteria, or is it because I just joined this new community and they have these things called training exercises that I want to participate, right? We'll have plenty of training exercises, and you'll have plenty of opportunities throughout the week to do that training exercise, but really allowing the week to play out to really show you where the market wants to go. But I'm proud that you submitted it. This is how you get better. This is how we start to realize what you're doing wrong and what you're doing right, and how we can try to find a forefront to capitalize on the things that you're doing wrong. So I do applaud you there. Right? You're doing the one thing that 99% of traders won't, and you're doing the hard things that don't feel good in the moment to make sure that over time you're actually developing in the right form, right? We don't know where to start with you as a trader until we know how you are trading. So this is good. This gives us foundational work to build from, and I hope that later on through your training exercises, as you continue to do them, you'll find, hey, I'm actually not going to just try to do this training exercise Monday or Tuesday. I'm going to really wait, and maybe it's Wednesday, Thursday, Friday when I'm taking this training exercise, unless I have something on Monday or Tuesday that really fits all my criteria. All righty. Mr.
Professional
Guppy
trader has a second trade below as well, if you want to take that one and then come back up to Guppy.
Okay, yeah, no, that's actually good. Okay, trade two. And I like that this one has, actually has a lot more, right? Notice how this one, you don't really have a lot of context here. This one you do, right? That shows me immediately that you already have a lot more criteria within this trade, right? There wasn't a whole lot you could say about this trade, but there was a lot more I could tell in here just by first glance of things that you could potentially have capitalized on, right? So the direction was long. You had 5 micros with a 1.5 risk to reward, trading in the London session. Emotions before, you were confident. Emotions after, you were calm. And during the trade, you did not care, since it's micros. I would not necessarily utilize this, right? This is not a good way of saying you did not care, right? So it's not because it's micros that you did not care, right? Because you might, I might be trading with 20 micros, right? That's still a lot, right? So don't think that it's the idea of because it's micros, you didn't care, right? That's not the case. Or because it's demo, you didn't care. Every single trade, you should care, right? It's not a matter of do you care or do you not care. We all care, right? You should care about your trade, right? Your trade is your performance in the market. So, just because it's lower size doesn't mean that, right? That shows me that there needs to be a mindset shift there as well, right? Because right there, it shows me that you're doing it for the money, right? You're doing it for the money, and if it's not a lot of money, then you're not going to care, right? Think about that. Think about how you're realizing that. So it's not the fact of I didn't care since it's micros, right? The emotions during the trade should be you did not care about the outcome because you know that you can't control the outcome, and you had everything that aligned in the moment. And so from there, you're going. It's not a matter of letting. It's not a matter of not caring. It's a matter of just letting go to all the possibilities that could unfold, right? You're going to let go of the outcome because you know that the outcome is out of your control. But you need to trade not based on money, right? You're not trading to make money right now, right? You're not. That's an after fact. That's a something that happens because of everything else. That's just a bonus, right? We are trading for the curiosity of can we be better than we were the prior trade. We're trading with the curiosity of can we actually capitalize on a potential market move? Can we actually understand to be able to get to a point where we can foresee the market, right? So don't have that mindset of, okay, I'm not going to care because it's micros, right? That shows me that you're trading for monetary value and not to get better with the understanding of the charts, right? If the idea is to not care, you should not care about the outcome because the outcome is out of your control regardless. Even if everything lines up, you're still going to have losing trades. So that's one thing I'll note there. The trade was taken with the sell side and buy side purge of the 0045 a.m. candle. Since the market is said to be bullish and ES has already traded above the consequent encroachment of its breaker and the inversion of it, I took the trade. Never move stop or take profits since the market from London is said to have a nice movement or momentum and really reaching for the daily volume imbalance. This was a confident setup. Stop loss is placed in the normal swing low so that it is said to be textbook. For the TP, I did not go for the upper price action since after the breaker there is said to be 2 PD arrays on the premium. So price action needs to develop more to take the confirmation. What I learned before joining firsthand, I would have looked for a short from the breaker, but within the week I found that when price is not respective of previous premium PD arrays, then we can take momentum to the upside. I was unable to master trend day trading, but Henry's outlook every day morning really helped me a lot. So in here, you can see from here, you've got, I believe you're utilizing this SIBI in here. I think that there's a SIBI in here. And maybe, I'm not sure what exactly this is, if you're using this as a breaker and you're utilizing it as inversion. But
It just looks
overall,
like a BISI in there on the 15-minute
okay.
where the trade is entered from.
Yeah, I was gonna say you've got a BISI in here. You can see price continued to the upside, came down right as it entered in that BISI. You took it to the swing low as a stop loss and just played that 1 to 5, and it was able to give you a low resistance run higher, right into your area. Great trade, right? You were able to understand what was going on with regards to the framework of the higher time frame bias. And notice how this trade was taken on the 22nd, which was Thursday, right? So overall, you later in the week, notice how more clear the direction in which the market was going was, notice how much more clear it was to you. You can notice how price was playing off of your higher time frame areas with regards to your weekly volume imbalance, the higher time frame displacement, and where price could potentially head towards. So, I mean, technically, I think that you were able to find a nice sound trade, and I don't think that there's anything wrong technically here. Henry, do you want to add anything?
No, I think it's a good trade. I think this is an improvement from your last, certainly, because you followed up with the higher time frame order flow. You get a better understanding at this point of the weekly framework, how the week could play out and form that weekly candle. And then you're recognizing that when you're trading with that higher time frame order flow from the weekly or daily charts, you're not expecting time frames and premium arrays below those time frames to move price lower, but rather for them to be cut through and used as inversion to keep trading higher. So you were right on here. Realized that higher time frame framework, found yourself a way to align with it. I think your stop placement is great. You're under the age of session, it looks like, and you're participating in London expansion. It looks the same. Yeah, great trade.
Alrighty. Good stuff, though. This one was way better than the first trade, even just front hand, backhand, technically, all that stuff. I like that you were able to add a lot more. So that even shows growth and improvement there. So I do applaud you there as well. Just a couple psychology things that we need to have a little bit of a mindset shift on, and you will. You will. Okay. Mr. Guppy, my trade exercise for the week. Duration of the trade was 7 minutes. 1 NQ contract, 1 to 1.1. Time of day, 12:24 p.m. PST. Entry is 17:39 9.5. Target was 17,431. Stop loss was 17,370 and 3/4. The emotions before the trade was neutral. Entered as a setup showed itself. Emotions during were neutral. Believed what I learned and let the trade play out. Emotions after satisfied. Trade what I learned and let the trade play out with success. Second week since joining this group, so I'm still learning ICT and I don't really know what exact model I used on this trade, but I practiced what I had been picking up on Henry's pre-market and trading sessions. The trade showed up on a 3-minute NQ chart, observed the candles at 12:09 PST and 12:21 PST, went through but didn't close above the BISI. Two candles are of the most equal lows, so it's a sign of rejection to go lower. Entered a long trade with one NQ at 17,399 and a half once the previous candle closed as a bullish candle. So, stop loss was set a few points below the swing low, and target is set a few ticks below the consequent encroachment of the SIBI on the 11:21 PST candle. The trade went as planned and hit the target in 7 minutes. NQ actually went higher and went through the buy-side liquidity zone around 17,515 after the trade closed. I only have one contract, so I cannot leave a partial to run, and the trade played out as planned. Awesome. So here's the business here. He's able to at least show there, right? He was able to gain a little over 0.5% on this, on his first trade. And then from there, you can see he is, I guess there's really nothing. It looks like you were going from, oh, right here. So this, he's utilizing how price is respecting here with regards to this BISI. He sees that price fully fills it, closes back above it, and then he's getting in on this candle right here with the idea that price is going to come back and fill all of this in the form of a SIBI, fill this inefficiency with regards to the higher time frame order flow. And then from there, I would just note that the risk to reward here is different, right? Because your risk to reward tool is not being used with regards to where your entry was. So just note that this right here, if this is what you're using as your risk to reward tool, this should be lined where your entry was, where your stop loss was. I'm noting if your stop loss was right here, right? Your take profit was right here or in and around this candle. I know it's not the high and low, but overall, I mean, you understood. To me, it looks like, I don't know the exact time, but maybe a potential silver bullet, maybe. Oh, okay, yeah, right. Okay, so your stop was right here. Okay, so yeah, you did have a 1-to-1. That makes sense. So your stop was below the swing low, very conservative stop, perfectly fine. Noting how price traded through this BISI, right? We were wicking this area, but then closed back above it. That's going to show you that price has a willingness to go higher because it does not have a willingness to close back below, utilizing this swing low in here with the idea that price could trade right into the consequent encroachment of this SIBI in here, and you can see how well it traded in there after the fact, right? Great trade. Note too that you didn't notice how you don't have to be a participant in all of this, right? All you need is that one portion, and you can grow into holding for longer trades, and you'll get better at that with over time. But just understanding, like you said, right, you had no areas to take a partial. So I would say if you're wanting to get better at holding trades, switch to those micros instead of those minis. Take a partial here. I know that you weren't able to because of the training exercise and it was your first one. But as we start to do more training exercises, switch over to micros, take a partial here and try to hold for another piece up here, right? Because you see where those equal highs are in that form of buy-side liquidity. But great trade. I love that you're super new to ICT and this is, your second week learning, and all you're doing is taking what you're learning and trying to apply what's being said into the market, and you're getting your evidence firsthand. Anything here, Henry?
No, I love it. I think this is a great first trade, Guppy. And this is a good opportunity to note too. It's okay that your entry isn't down in the BISI. Over time, you're going to learn to be able to identify that as an earlier entry and participate down in there. You still did buy inside the down close candle in your order block, which is nice. But overall, the most important thing here is recognizing that the entry is not the most important thing, but the draw on liquidity is. And you were able to recognize that price is set to go higher and work toward the buy side, and then you can still shape a trade off of it. So as long as you're entering in a place where you've identified the low that's been established, and then you have a expectation for price to go higher, you can find profitable trade opportunities within that. So I think it's a great first exercise. Thanks for submitting it and participating. And I'm
Awesome.
excited to see how you continue to grow.
I'll also note too. I want to note too. I want you to open up. I want to encourage you and challenge you to open up a ticket, and I want you to explain to me and Henry, what all these indicators that you use here, right? It looks like you've got a bunch of moving averages and stuff like that, and I know you're using volume down here. I want you to explain to us how those benefit you in your trade. I'm very curious because I'm curious to know if I can be the devil's advocate to show you that maybe in the next couple of weeks we could start to take some of these indicators off. But other than that, great trade. I love that. Other than that, we will go into the next one, Mr. Ron John. Duration of the trade was 1 hour and 16 minutes. One NQ contract, 1 to 5.6. Time of day was 13:25 p.m. So 1:25 p.m. entry, the New York PM kill zone. 18,018 and a half for the entry, 18,081 for the target, 18,007 and a quarter for the stop loss, and the stop loss was moved to break even once new 5-minute BISI formed. Emotions before, FOMO to join the algo spooling. This is something you need to note, Ron John. You cannot get into the idea that if price is going and it's spooling in that direction, you have to wait. It's either you wait for it to come back down to a level or it goes without you, right? Friday, price spooled higher into the buy side without me. I waited and I was able to get a TGIF set up later on, right? You cannot try, if that bus has already left, you cannot try to just start running after it, right? The next bus will come 5 minutes, 15 minutes, 30 minutes, an hour down the road. Do not, when you get that FOMO of joining that spooling, you're going to get hurt. And I think you can see in this trade, you were able to understand how that affects you. After expansion on Wednesday, I was expecting Thursday and Friday to be a huge expansion day based on weekly profiles, emotions during. From my past journaling, I've seen that once the algo starts spooling, using any 5-minute order block to take entry and holding till the end of the day works. Once I entered, I was comfortable managing the trade with stop loss below the body closure of the 5-minute order block. Emotions after, satisfied with the execution of the trade. Once I saw 5-minute SIBI formed near the daily wick consequent encroachment, first buy side liquidity, I exited the trade. No partials were used in this trade. I did give away almost 24 handles in profit as I got in with one contract, only wanting to see if it takes out the all-time high buy side liquidity. First 5-minute PD array of the SIBI made me exit, which was okay. So in here, you were able to get a good trade in here, and that's good. Okay, I was looking over here to see if this was your trade, so apologies there. I thought that this was your trade in here. So yeah, you were able to get on top of that spooling, but I'm glad that you were able to wait. It's not the idea of, as price is running in one direction, I'm glad that you were able to identify and navigate your way through using this down close order block, right? You were able to identify this order block. Now, I would have liked to at least see you wait a little bit longer because this order block is not quite an order block until we close outside of it. So really, the more ideal entry should be actually the very next candle, right? When the next candle dips down in here, that should be the signal to go into there. Because if you can see in here also, you were 5 minutes early on the PM session. If you would have waited, you would have been right at the opening of the PM session. And then from there, this candle wick down in here on this order block would have been the most ideal entry. Yes, you're a little bit early, but you're on side because you're using higher time frame order flow, and that's okay. But you do want that second end verification with the idea of price needs to close back above this candle. And then from there, when it returns back into it on the form of this wick, on that down closure, you can buy and then go higher. But overall, you were able to use the right context, right? You use the down closure, you use the closure from there, and you knew where price was heading, right? So you knew that where price was spooling towards. You wanted to be a participant in it. And then from there, I would have said, I think you were able to at least manually get out here, and I think that that's good, right? You were able to see price create a little bit of a displacement in here, and that might have signaled you that price was able to wick lower, and look at how good that exit was, right? You had such a good exit because price did not continue going higher. It would have came back and stopped you out. So apologies on the first note with regards to you trying to chase the spooling. You obviously had a framework in order to do that. I just want to make sure that all the other traders know that when when price is spooling in one direction, you need to have it's not just buying on the up closure as it's going. You need to have a framework in which you're going and ordering around the specific area and you're allowing it to trade to that level and not just, oh shoot, it's going without me, let me just buy, right? Because even though that will play out sometimes, that could offer a potential area where you're not having the most optimal trade entry. But you can see in here with regards to Ron John's entry, he had an area of context in which price was trading, right? Price had a 1 hour, price has a 1 hour BISI below it. He's thinking that it's going to remain unfilled because price is pulling higher and it's not worried about filling it yet, right? It's going to go towards an area of inefficiency and liquidity, and you're able to capitalize on it. The only thing I would note technically is great trade. Just try to wait for that extra confirmation and then get that entry on this candle right here, right? Even though it's going to give you a little bit less of an entry, maybe by a couple ticks, I would way rather give off a couple ticks of my entry to have that extra verification, because that extra verification could maybe allow for a little bit more risk, right? If I wait for this candle to close back above this order block in here, from that moment, then I can potentially add an extra contract because I have more confirmation and I can use my risk appetite to understand that, okay, I have that extra confirmation. That could also equal a little bit more risk. So just keep that in mind. Anything else here, Henry?
I think it's a good trade. I would just, the only thing I would note on it, it seems like you were reaching for the all-time highs, buy side, so wanting to see if price could make the run up there. But this is an important lesson too on being content with enough and being okay when that first buy side target is reached to take your trade off there and not sit through the retracement. And if you're wanting to participate in a larger move, then look to do so with the opportunity to take partials. So rather than trading that one mini contract, you can participate with 10 micros. You have the same amount of risk on, but you allow yourself to capitalize on the buy side being reached. And then if it is to go extend beyond that, then you can reach for the all-time high target up there. But I think you managed this really well, Ranjan. I'm glad you were able to recognize the change in the order flow there and exit when you did. Sarah had a question. Can you explain spooling? Spooling is pretty much when when price is pressed for time, and so it needs to run quickly to a certain target, just like we saw at the end of the FOMC day last week, where in the last hour we had to run straight up to the buy side. And it prices quickly and continues going higher, 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 or lower, lower, lower if order flow is bearish. And it does so with very minimal retracements. So not a lot of deep returns back into price action. Spools or it runs very quickly.
Yeah, it's the type of price action where if you're watching the chart live, it's almost like it's super clear that it's only going in that direction because it's going so quickly, and it gives new traders the idea to try to get in because they see that, but that could also potentially lead to you're not allowing for price to potentially retrace because it's not retracing. And although it's the idea of, you want to get in, if you don't have the criteria of an entry, you don't have an area for stops. So the reason why it's key to note, if you're trying to get in price action while it's spooling, odds are there's no clear area where you could put your stop loss, because if price isn't retracing, it's creating a lot of inefficiencies that it could return to. And so if it could return to those inefficiencies, you have no area to potentially identify where your risk is going to be set or where your stop loss is going to be set. So you need to keep that into consideration. Sometimes, and Ron John's point, right, he was able to navigate, and thank goodness he was able to see this down closure candle and identify it as an order block with the idea that price would continue spooling. But sometimes it's not even going to offer this, right? Because if you think about it this way, if there's no down closure here, there's really no entry that might have been able to be capitalized on. And you just got to let it go. You just got to let it run without you. And that's totally fine. We saw that also early AM session on Friday as well, delivering into the buy side. All righty.
John has another trade below as well.
Okay. All righty. Duration of the trade was 36 minutes.
One more.
Oh, this is a reach. My bad.
That's a reach.
There we go. All right. So 37-minute trade, 1 NQ contract, 1 to 1.5. Time of day, 8:30 a.m. Kill zone, pre-market entry. Entry was 18,061. Target was 18,021 and a half. Stop loss 18,088 got stopped out in pre-market. Emotions before, though the higher time frame bias was bullish to 18,121 all-time highs. External range liquidity in the pre-market, there was a displacement on the 5-minute. I took that as a sign to enter short. Very calm and composed during the trade. Took a lot of time and made me nervous. I should have cut the trade as I wasn't feeling good and at a point to start questioning my trade idea. Emotions after, I was upset that I didn't join the order flow and instead shorted based on lower time frame displacement. I was induced into the short and became the liquidity. The draw on liquidity was clearly all-time highs. Buy-side liquidity and previous day's low and buy-side liquidity was clear as day. And in hindsight, this trade frustrated me. I journaled my emotions and also journaled that if I have to take a counter trend trade, that I will reduce the size by half. I lost 80% of the gains from the prior winning trade of the week because I didn't follow the higher time frame narrative. Right. And I think that you answered a lot of your questions in itself. Right. And I think that this is good going back and reading this if you're new to trading. Right. Having the idea of, well, what is one of these right here? Right. What is the one rule in the exercise? Right. 2 trades maximum. But if you win your first trade, what do? Right. There's a reason why we have these rules. If you win your first trade, what do? You stop. Because we're trying to get you guys to avoid this right here, right? You lost 80% of your gains from the prior week, from the prior trade. That's why we encourage you guys, and that's why part of the training exercise is to stop. Be content with enough, right? Because when you're not, this can happen. But right here, you can see that, my biggest thing would just be, you knew what the higher time frame order flow is. You knew the context of most of it, and this is where you're trying to tame the market. You're trying to do too much into the market. You're trying to capitalize on every little move, and that can hurt you, right? This also is a key to note, how well do you respect the market? Because when we talk about respecting the market, we have to realize that if we don't have the utmost respect for this market, we're going to have situations like this, right? This shows me too, you're trying to call every little move, every little movement in price, when in reality, we are dealing with a market that does not care about you. It does not care about how much money you put in. It's going to trade where it wants to trade, when it wants to trade. And so having respect for the market is not just, it's the market. No, it's the idea of, I don't own this market. I do not run this market. I do not know for certainty every single move that's going to take place. And when I try to get too good for myself, or I get overzealous or overconfident with where I could potentially see price, it's going to hurt me. And that hurt has monetary value tied to it. And so if I'm not content with enough within my trading week, if I'm up on the week, and that's the thing, you get up on the week, you have a great trade, you get confident, you start to feel as if you can see every move. And just because you might see every move does not mean you need to trade every move, right? I would say another reason as to why this trade didn't necessarily plan out was time. Not only was it higher time frame order flow, but it was also time. You're trading in a time window that is statistically not, in an area where you would like to see price trade, right? You're trading prior to 8:30, and this should be inside your data, and this should be journaled. Hey, maybe I stay away from pre-market, right? Pre-market is something where the probabilities, right? We're dealing with a game of probabilities. How probable is this trade? How probable is this trade? And you start to blur out those probabilities when you start to have winning trades, because you start to not take into consideration every little thing like you should, because you're confident, because you had a good trade, because price did what you wanted on the last trade doesn't mean it's going to do the same thing on the very next trade. So I wanted to just keep that in note. Is there anything else that you wanted to talk about here, Henry?
I think you covered it mostly for yourself here on John, and the analysis that you did after recognizing the things that put you astray here. I think just looking at your daily chart too, and I know we talked about this in the morning chart chat as well, utilize those opening prices for the day, your midnight and your opening price, and allow those, or your midnight open and your 8:30 opening price, and allow those to help you shape this framework here. Because if you look at your midnight open from this day, the entire move that's taken place through the London session has been a manipulation below the midnight opening price. And then price has now recovered back above that midnight open ahead of your entry there. So if you're seeing that manipulation below and you still have that buy side target above, where it seems like you were expecting price to reach up to the buy side at the all-time highs already. So trust in the narrative that you're seeing and the expectations that you have for price, and find an opportunity to participate along with it. And if there's no place for you to enter, then that's okay. Allow for it to go with you, and then you can find opportunities to either participate in a continuation later or participate in the reversal, like you had that TGIF on Friday.
And I'll also note too, this is why these things are so good, because not only do they outline technicals, but they also outline psychological errors as well. And in this community, I've said this before, I'm not going to tell you what you want to hear. I'm going to tell you what you need to hear, because I'm going to hold you to a higher standard, right? You're a better trader than this. I know you are. I've seen you trade, and I know that you have a lot more potential inside of you. And I'm going to be the first one to tell you, right? Because I hold you to that higher standard. I know what type of trader you are, and I know what type of trader you can be. And there's these simple, tiny little mistakes that we can work out. And I'm glad that you're open to sharing this and posting this, right? And you could have easily cold shouldered it and just said, you know what, I'm not going to submit this. No, but you know what you did. You know what you did wrong. You mentioned it and you posted it so we could talk about it, to show other traders too, right? It's not only helping yourself, but it's helping other traders. And in this community, and all traders that are listening right now, right? Not just Ron John, but I'm going to hold every single one of you guys to a higher standard. It might feel uncomfortable at first. It might feel weird. It might feel hard, but I'm going to hold you to a high standard. And I'm going to tell you when you are better than certain areas in the market, right? You're better than this, right? You should not have necessarily gone in, and you should not have necessarily tried to fit such a square peg in a round hole prior to having that data, right? What's that data? 8:30 open, 9:30 open, right? It's Friday. You're coming off of a great trade, right? And I tell people all this all the time, right? Your decision in the now will constantly reflect how you feel later on, right? And I think that that's something to note too, is, right, going into this trade, ask yourself, how am I going to feel at market close, right? I had a great trade earlier in the week. How am I going to feel at market close? And from that moment on, is this a trade I really want to take, right? I've got 8:30 open that I need to probably look at. I've got 9:30 open I probably need to look at. And then I've got an idea of, I'm going to be on with Henry in the morning. I can start to see what he might be doing and stuff like that. So just keep that a note. I think that the best thing that I can give you from this trade is, one, you're transparent, right? You're transparent. And that's not only going to help other traders, but it's going to help you, right? You're being transparent within yourself. You're noting it, you're journaling it. And I guarantee you, come next week, if there's one thing that I can encourage you to do, and I challenge you to do, is when you win your first trade, stop. It's going to be hard, but it's something you got to practice. And if you don't practice it, it's not going to come. And that lesson will always repeat itself until you learn it. And so no matter how good or bad whatever trade is next week, I encourage you to simply stop. Just stop, right? There's going to be more opportunities. As you can even see in the same session, hours down the road, there was plenty of opportunities. So I want to encourage you to utilize that idea of, there's going to be more opportunities, right? Even though we don't see everything all the time. That's something that I want to know. But I'm proud of you, right? You're being transparent. You're doing the right things, right? Not only are we going to highlight all the good things and the good trades, we're going to highlight the bad trades and the bad things that we do. Because if we don't bring those to light and we don't necessarily do anything about it, then they're going to keep repeating themselves, right? So I applaud you there. I will go back up. Terry. Trade idea, price was seeing resistance at previous week open and new week opening gap after taking the high of the day before. Price also was having trouble displacing over the Asia range high. First chart is the original entries in the TGIFs, I guess. This TGTS, I'm not sure what that means. Second chart is modifying after the TGTS hit. I'm not sure what that exactly.
Targets, maybe? Targets.
Targets. Okay, abbreviation for targets. So first chart is the original entries and targets. Second chart is modifying after the targets hit. Initial entry at the 15-minute fair value gap scaled in when price entered the new week opening gap, using it as resistance. Took off half just below the 50% of the previous 15-minute wick. This made me take a break even plus trade, leaving my stop. Third target set near a swing low and at a 15-minute order block fair value gap. After seeing price deliver the midpoint of the 15-minute fair value gap, 12:45 Thursday would have been an ideal third target. Third target hit and stop loss moved to profit, and runner target moved down. Emotions, little, mainly due to paper trading, and just woke up at 3 o'clock, 0300. I try to trade before work starting at around 5 o'clock. This would have been, if this would have been a live account, I would have closed the trade. I have to work on waiting for entries and exits as I am impatient due to work and always enter and exit too soon. Emotions picked up a little when it came back to and seeing that my third target hit, wishing I would have been in a live account. This is something we need to shy away from. That live account will come. Focus on the now, focus on the account that you're trading. If you can't do it in a demo account, you won't be able to do it in a live account. You've got to prove to yourself that you can do it in a demo account before you can do it in a live account. At 4:58, time to get to work, plus closed as a 5-minute candle above previous up closed 5-minute candle. So in here, you can see he is shorting within, I think that there's a SIBI in here, right? So he's utilizing the SIBI, utilizing how price delivered off the new week opening gap. And then he's taking his partials, which is key, right? I would just say too, also, make sure, you're using minis. So that's something that I would try to maybe switch to trading micros. Minis is a lot, right? And the more money you put in your face in front of the demo account, the more eager you're going to get to a live account. And that's harmful, right? You don't necessarily need to go and just because it's demo, use a lot of money. You want to practice like you would on a live account. Would you put this amount on a real account? If not, put what you would on a real account on a demo account. And here, you were able to see after he took partials, moved stop to break even, right? Creating that risk-free trade. And then just leaving one runner, that's totally fine. And I think price might have stopped you out at break even. I'm not sure, but great entry on a 15-minute, right? Inside this 15-minute SIBI is very good. You can see that there was one level here. It might be the new week opening gap. I'm not sure, but everything apparently lined up, right? Where you trading price into, you've got an inefficiency in here that it could potentially trade to, and you can see. I think you're looking in here potentially just for this swing low inside this higher time frame area. And it looks like you were able to get pretty good trades, right? Totally fine there, right? I think you're slowly getting to a point too where you're understanding that it doesn't take a lot, right? It doesn't take these big moves, right? You don't need a big move all of a sudden. But I would also just note too, you're trading with minis, so these numbers look great when they win. They don't look great when they lose. And from that moment on, I would encourage you to switch to micros to start to understand, okay, if I'm really going to trade in a live account, what will I be willing to utilize, right? Because, it's something that you just build into. You don't just walk straight into. But I think it's a great trade. Do you want to add anything, Henry?
I think great trade as well. It's just like we talk about with the habit forming, and we talked about this in the course video as well around building a demo account. When you trade in these, you want to do so just like you would in a live account. So that comes from trading it from the framework and the model that you would trade in a live account, and also using the same sort of risk management that you would in a live account. So I know we start them with 100,000 or whatever on here, but when you're thinking about the money in the terms of things, don't concern yourself with the actual dollar amount, but how are you risking against that trade? How are you performing your risk management? Because that's what's going to carry over when you do decide to take this to a funded or a live environment. So don't allow your emotions to tie to, oh, I see it's a lot of money, I wish I was doing this in live. No, think about it in terms of the habits that you're forming. I'm practicing proper risk management. I'm taking the framework and the model that I trade for myself. This is the result. Okay, win or loss, whatever, you take what you learn from it, and you're building the proper habits so that you'll be ready when you change into a funded or live environment.
And it goes back to what I was saying on
And
it goes back to what I was saying on professional traders thing, where he was talking about how he didn't care since it was micros, right? I want you guys to have this complete mindset shift, right? Because I had this, every trader has it, right? We trade to make money. You do not focus on the money. The money is a bipartisan act of all of the other things, right? It is an outcome that is out of our control, and it's something that comes with time. Your focus should not be on the money, right? Your focus should be on understanding the management of the trade and where price is going and the direction that it's going in and how you can navigate in and around it, right? We need to have this mindset shift collectively as a group. We need to have this mindset shift that the money will come. You need to have this unprofound faith that the money will come later down the road. Just like working out, right? You work out day one, you don't see muscles. You work out day two, you don't see muscles. You work out 1 week, you don't see muscles, right? You work out 1 month, you don't see muscles. But you know that if you continuously do it down the road, you know that it has to come, right? With the practice over time, consistently, it has to come. Same thing with trading. You do not focus on the trade, right? The first day, if I ever worked out and I go into the gym and I start grabbing the heaviest weights, that's not going to make me stronger, right? That's not going to show me. I'm not going to immediately, just because I go grab the heaviest weight doesn't mean that I'm going to have muscles, immediately, right? So it's the same idea. We need to shift our mindset from I need to have a lot of money and I need to make a lot of money. We all need to make a lot of money. We all need to have a lot of money, but that's not how we train. That's not how we study. That's not how we go about it. We need to have the curiosity of how we can better ourselves in the market and how we can get a better navigation in and out our trades. And we start small and work big. There's no way that you're going to be able, if you cannot manage $100 responsibly, you cannot manage $1,000 responsibly. You cannot manage $100,000 responsibly. The way you treat $1 is the way you'll treat $1 million. So you have to identify that, right? It's demo. You're not going to make any money anyway. So having these higher trades, these higher monetary trades, do nothing but try to encourage you to go to a live account, right? So you need to get that mindset shift, right? We all need to get that mindset shift. I'm not here to try to show and put these big numbers and gaslight myself into thinking that I'm a good trader, because the bigger the number, the more confident you're going to get, when in reality, that's not the case, right? Your confidence doesn't come from the amount of money that you make. And if you go in demo accounts, slinging minis, 5 minis, 3 minis, 2 minis, 10 minis, whatever the case is, and you see these big numbers, you're going to have this false confidence that's going to be super harmful to you later down the road. You need to start small. You need to build small. You need to build confidence through evidence that you can do it time and time and time and time and time again. And then you build from there. And over time, you will get it. But great trade. Great trade. I can't fault a winning trade. So good stuff there, Terry. I know that you got a lot of distractions, and I know work is hard too, so I'm proud of you, right? You're still doing what 99% of people aren't doing, right? You're waking up at the crack of dawn, and you're trying to figure this game of trading figured out, right? You could use excuses here and there, but you're still waking up. You're still doing the things that you're doing the things that people don't to get what others won't, right? So over time, this will pay off, right? Over time, this will play off. You had a great trade. I'm glad that you're starting to see a little bit more and more of the charts as the weeks go. I see that you're showing up not only on the training exercises, but on the live streams as well. And I will applaud you there, right? I will applaud you there. And I will say that over time, it will get better. I'm just encouraging you to maybe size down a little bit more, because you don't want to hurt yourself, right? And you want to think about that future self. And you really, when it is time to go live and it is time to go funded, you want to have the utmost conviction that you can do this. And not because there were some big numbers fluctuating on the screen. It's because you went in that demo account and you grinded it out, and you day in and day out and week in and week out did the right things, made the right decisions, mitigated risk, did all this stuff, took partials, and you have a system that you've seen and proven to yourself time and time and time again. So I applaud you there. Arish, technical analysis. Duration of trades, 36 minutes. 2 NQ minis. Risk to reward, 4.5. Time of day, day of week. Friday, New York session. He was using a 4-hour BISI. Sell side liquidity swept, displacement, and a 1-hour BISI entry. Specific draw and liquidity targeted was the -2 standard deviation aligned with the midnight open. Stop placement, 11:30 a.m. candle low. Partials taken, 1 standard deviation. Terminus, 18:0 5.5 flat, aligned with the -2 standard deviation. Time of break even, if used, move to break even once displacing higher at 11.55. Specific model that was applied, sell side liquidity swept 1799 and a quarter inside the 4-hour BISI, displacement entering off of the 1-minute BISI. Psychological analysis, emotion before the trade, was ready for the trade. A lot of PD arrays aligned up during the setup. During the trade, was super close to being stopped out, but was okay if I did. Just trusted the model. Wasn't the only one who took this trade, so it was good to be able to communicate while being in the trade. Shout out to Kate. Love it. Emotions after the trade. Happy I followed the model. The market repeats over and over again, and knowing that I'm okay with missing trades, there will be many of opportunities every day. Right? So he's got the idea of how price had traded prior to the AM session, middle of the AM session. We trade into that higher time frame inefficiency. We come off of it. We take out all of the liquidity following the sell side. We push back higher, back in and above. And then in this 4-hour BISI, you can see that there is a BISI right here. He's utilizing this swing point right here. Price gets just right below it. Great stop placement, right? Great. There's a reason the stop was here, and there's a reason it held. From that moment forward, price pushes back up. He takes that partial from there. Let's price trade back down into the higher time frame POI one more time, and then trades higher into this negative standard 2. And look how he's able to hold, and he's able to exit right here. Look at that great exit, because after that exit, what do? We retrace right back in, right? You get greedy. You try to hold the whole trade for, whatever the case is, right? Why was he able to hold this trade? Because he already paid part of it here, right? And he was enough. He had the framework of the -2 lined up with the high in the midnight open. From that moment on, he pays himself. He's out of the trade. Great trade. What does the price do? If he got greedy and he held and he didn't take any partials, what does that trade look like now when we trade back down into here 15 minutes later? Not so good, huh? So, Arish, good stuff, my man. Great stuff. The way you use the swing points, I applaud you there. I like how you aligned it with the high. You found that entry on the 32nd, I believe. If it wasn't 30-second, it was a 1 minute. You have the BISI. Stop placement's great. It's the swing low below the consequent encroachment, it looks like, of this POI. Good stuff, my man. I applaud you. Henry, anything else you want to touch on? I don't see anything wrong with the trade.
I like it too. I took the same trade with you on Friday. I like the exit as well, because just like we talk about using those opening prices to shape the framework of the trade, they can also be excellent places to take partials or exit out of your trade. If you're not expecting price to rally all the way back up into the buy side again, it can reach back and reference that opening price being the midnight open, right where you had your partial there, and then continue lower off of that. Well done.
Great stuff. Great stuff, Arish. I know you've been working hard too. I'm glad to see that it's been paying out. Good stuff. You owe yourself a pat on the back. Alrighty, and notice too that there's not a whole lot that that there is to talk about on this, because it's good, and that's why I also constantly go in and say you're not going to learn too much from your winning trades, right? The one thing that I can say is the reason he was able to hold through this was because of the partial. That's good to note if you're learning, but you're going to learn through your failures, right? You're going to learn more through your failures than your wins. So as winning trades are good, just know that it's just, okay, wash, rinse, repeat, wash, rinse, repeat, wash, rinse, repeat. Notice how we talk a lot more on the losing trades, because that's where we can learn, right? And even though Arish had a winning trade, there's even some of the losing trades in here he can learn from too, right? There's things that he might have not done this week, but he could potentially prevent himself from doing. That's why transparency is so key. Alrighty, Miss Kate. Narrative, trade 1. We'd been selling off since the start of the week. My idea was that we'd sweep the low one more time since price seemed quite heavy after the FOMC minutes were released. She had a bearish bias, so counter trend trade to the higher time frame. Trade idea, we'd close below the daily volume imbalance hourly, so when price traded into a 1 minute SIBI and seemed to be selling off, I got short on the next fair value gap down. Emotions before, pretty neutral. I was fairly confident price would make another move down to the lows and beyond that, maybe go to the 0.75 level of the weekly BISI. I also thought that the 5-minute balanced price range meant that price shouldn't trade any higher. During fairly calm, price actually came within a tick of my stop loss, but then came back down again. I thought after that it would finally go and take the previous low instead, reverse back up. As the SIBI was being closed above the new BISI, I took one contract off to mitigate my risk. I was thinking that my idea could still work, but I didn't want as much risk on it, but I was stopped out on the other contract shortly after. Emotions, no emotions, because I knew I was just plain wrong. I didn't take the clues that I had seen into my analysis. Right? So over here, the idea that price is going to come into this short right here, right? With the idea that we're going to take this low one more time. 21 minutes, 2 contracts, 1.37, using a fair value gap, a volume imbalance, and a 5-minute balance price range. Drawing on the low of the day, 1 minute swing high, no partials, no break even. Time of the day, trading that power hour. And you can just see how difficult it is going against the higher time frame order flow, right? Even though you do have a setup, price delivers below this low, you've got a little imbalance right here. That's where she's going short. Price kind of just hangs around, comes back all the way up, almost stops her out. From there, she's using this, I believe, this swing high, maybe a tick or two more for a little bit of wiggle room, comes back down. This is hard too because it's engineering liquidity in here. When price comes back up and closes back up into this level, you're able to sit there and, you know, I'm glad that you mitigated some of it before the full thing hit. That's okay. That's still a win in itself. And then price stops you out. Totally fine. You're going to lose trades, right? You've been on a killing streak lately. So, you know, that all of this shall to pass. This too shall pass, excuse me. Right? Not every trade's going to be a winner. You're going to go on winning streaks. You're going to lose trades. That's totally fine. I'm glad that you were able to at least see a little bit of it before it hit. And you know, as well as I do, right? When you're going with, or if you're going against higher time frame order flow, the probabilities are always just going to be less. So anything you want to add here, Henry?
I'll just note, it looks like you have it marked here, but keep a note on price trading down into the higher time frame PD raise. Like this looks like it was from Wednesday, which is when NASDAQ reached back into the reclaimed weekly BISI. So price is already reaching down into that higher time frame PD ray. At this point, it could be pretty extended down into a discount where it's a little bit trickier to find that short setup. And then I think you did an excellent job to mitigate part of the position here. I'd just say when you're looking for price to trade off of that SIBI where you entered from, and then to drop down to the sell side, think about the most ideal scenario versus how price could trade to where it could potentially be a setup that goes against you and goes toward your stop. The most ideal scenario would be if price trades into the SIBI and then creates new displacement to the downside off of that, working toward your target, showing that real effort to snap and run quickly toward the sell side down there. The fact that it's consolidating, running out the lows, that short-term low right after your entry, and then coming back up into the range, and then the next inefficiency that forms is a BISI going back up against your stop, is not following the most ideal scenario at that point. So when you're starting to see that happen, that's an opportunity for you to start mitigating part of that position and then allowing it one more chance maybe to start working to the sell side, and then you can take the exit if it doesn't. But you did well to mitigate part of it, and I think you have another trade after this as well.
Good stuff. Takeaways. Oh, I didn't even see this. Sorry. Takeaways. Price does not have to do anything. I was too stubborn in thinking price should reach down into the previous lows when there were several price signatures pointing towards bullish reversal. A, price had already reached the 4-hour standard deviation of the Asia swing high. B, we had SMT and ES, so there was no need for NQ to come back down to the lows again. We were overall still bullish. 2, the RR on this trade was suboptimal. I should have been so eager to enter a trade with this kind of RR and under these conditions. 3, zoom out more. Don't do analysis on the 1 minute. Now trade number 2. Wednesday afternoon, we had made the low of the week, and we should now seek buy-side liquidity above and eventually all-time highs. Bias was bullish. Trade idea. Originally, I had thought that price could retrace deeper before reaching back up, but if I saw price didn't seem to want to go lower after the 9:30 open and instead created a BISI right near 8:30, I felt that it was likely in a hurry to get to the buy-side liquidity, so I used the 8:30 open as an entry. Emotions neutral after yesterday's price action. I was fairly certain the weekly profile was Wednesday low of the week and that we could continue to seek higher prices. During neutral, price went my way immediately after my entry. After, happy that I read price correctly and it ended up with the same trade as Henry. Also happy that I managed to erase the drawdown from yesterday and a little more. Bingo. Bingo, 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 bongo. Beautiful. BISI, 8:30 open, buy side liquidity. Boom. Noting that after the 9:30 price didn't seem to want to go any lower, price delivers higher, and then you're using this area and then using that volatility in and around that 9:40 at 15 minutes after. Yeah, you're on
That's
it.
a prime trade right there. You know what I really like about this trade too is your entry is not even in the BISI, it's on the 8:30 opening price. That's showing here that the entry itself is not the most important part, but the framework is. Why
Yep.
is it going where it's going? What has happened ahead of that? Where is it coming from and where is it going to? And so you recognize that this is using that AM session opening candle, imagining the whole AM session from 8:30 until noon as one single candle, and everything below that 8:30 opening price is the manipulation lower. So if it's going to start going through there and distributing higher, that's price creating the wick below the opening price before distributing higher. Great trade.
Great
And you
stuff.
mitigated your loss. Perfect. I remember you
Take-
taking that trade in the live stream.
Takeaways. Unlike yesterday, I did all my analysis on the higher time frame and only went down to the 1 minute for execution, and that made a world of a difference. 2, good to know that I can sit on my hands after a loss and not want to immediately make it back. No, I accidentally entered a couple of trades on this account on 216 that resulted in a loss of 78.80. So there's a bit of discrepancy in the total. Totally fine there, right? Notice how she's able to make that back, right? It looks like these were her 2 losses from the day before, and she's able to mitigate that all in that one trade and more. Love
This is
it.
a good note too on, I would encourage everyone to do this too. Look back through the history of your trades. If you're keeping a good log of things, identify the trades where you trade with the higher time frame bias versus against it. And identify your rate of success with those trades where you're going against it versus the ones that are with it. I would be willing to bet that almost everyone is going to find a better rate of success trading with that weekly and daily expansion.
Yep.
So just
Alrighty.
keep that in mind.
Last but not least, Mr. Aiden, concept used was the silver bullet timing unicorn entry pattern using the micro E-mini NASDAQ 100 March contract. 22nd of February, 1 minute execution, 15-minute draw on liquidity, 9-minute duration, 10 contracts, 1 to 2.23, 10:37 a.m., 10:38 pyramid, 10:42 reduced position by 3 contracts, and exited at 10:45 a.m. Liquidity was taken at 8:30 intermediate low. Draw on liquidity 16 February 2024 swing high, 0 partials, full pull, stop placement below implied and inverse fair value gap, accounting for price. If price were to violate 2 PDRAs, I would most likely be wrong in my trade. Time of break even, none, bullish narrative with buy side in such close proximity to having a reaccumulation at 10 a.m. I looked for 3 PDRAs that was to support price downwards to be violated to enter into a silver bullet trade, expecting price to run quickly to buy side. Relatively simple idea. I didn't see the possibility of price moving against me as we were trading from a higher time frame and efficiency, and I had entered below the 10 a.m. opening price. I had also forgotten to close my sell limit order at my buy side target and incurred an extra $290 loss. Something to note and remember in the future, negative 492 actual loss this week. In hindsight, I've noted that I could have done differently where I could have waited to the macro to reprice to the lowest marked BISI and then reaccumulate and entered with a silver bullet through that delivery. Emotions before, sad, undertoned after tape reading and watching price reach my projected scalping targets. After entry, anxious to see if I executed the silver bullet model correctly and if I would see my projections play out like it did during the week. Emotions during the pyramid, didn't have a good feeling with the pyramid as price did not seem to have a willingness to go higher. Emotions after closing, generally pretty pissed that I entered early again and watching ahead to my target. However, still satisfied that I mitigated some risk before stop was hit. So in here, you can see he's playing inside this 8:30 a.m., 10 a.m. open. And here he's utilizing the inverse fair value gap in the form of a SIBI in there, but then he has a BISI in here and a BISI in here as well. He's entering in also, so it looks like he's entering in on this BISI. And then from there, it looks like this in here stopped him out, and this in here, or it looks like he manually stopped himself out a little bit, mitigated some risk here, and then got stopped out here. I mean, a couple things I would just say, this is tricky because everything looked good in here, and this was hard, right? This was hard. This actually stopped. This kind of messed with my head a little bit here too, right? This is more of a high resistance, deeper retracement than we would want, right? Because if you look to see if you extend these areas out in time at 12 o'clock at that 11:50 to 10, 11:50, 12:10 macro, price respected your areas beautifully and continued higher. So yeah, this is very frustrating. And this is just another reason as to why we have to understand as traders, it's just not always going to work, right? It's just not always going to work. Your direction was right. You just were, you were on side. It was just time, right? I think as the year goes on and we get into later parts of the year, you're not going to see this extra move in price action, right? This is very hard to deal with coming back into this area. This was a very tricky point of the AM session that stopped me out in break even. But it's just something you learn from, right? You're not going to win them all. And, I would say one thing that you could potentially do later on is you could sit there and, understand that you can always come back and you can always have another entry in here, right? This is another area where you could always have another entry. So encouraging you to obviously stop if you feel like you need to stop, but I think you're an experienced enough trader where you can go back in and you can get another stab at it. And here's the business, right? Relatively small losses though, right? They're relatively small losses. These are not killer losses, right? They're not going to kill you. They're not going to kill the account. They're definitely easy to make back. So, overall risk is being managed there accordingly, and that's a win in itself. Anything you want to add here, Henry?
Yeah, I had something. I know we had talked about this on the live stream on that Thursday. Let me go back in my charts and see what the reasoning was for why price should work lower off of there. Okay. Well, it was a deep retracement regardless, but this is why we talk about the framework as well. And if you're looking to be a participant long, the best entry opportunities are going to come at and below that 8:30 opening price. And then if you're looking at the 4-hour expansion, at or below that 10 a.m. opening price. So if you look at this is a good indication. If you look at just your 5-minute chart, and we can even, is this the last training exercise? I can pull up
Yes.
the chart real quick.
Yes. Here, I'll stop sharing. And then you can talk about this week's training exercise too, since you'll already be on.
Okay, cool. This is what we had talked about in the live stream. So this was Thursday's trading action. This is where your entry took place, right in here, right there. And what we just want to recognize is that throughout all of this price action higher, the trade up to the buy side right here, which we never see closure above right there before price trades into the inefficiency right here. Throughout all of this price action, look how it's just grinding, 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 grinding. And each time it's creating higher lows, higher lows, higher lows, not running back on anything. That sets up potential low resistance liquidity for a return back into a discount before we continue. And so what you want to look at here is your 8:30 opening price right here. And then I'll go down into a 1-minute chart from here. Okay. So this was the first entry that we talked about in the morning, right below 8:30 open to take it up into the buy side. And then note how price never returns back to the low created through the 8:30 opening. So coming back closer to it to offer another accumulation opportunity, and then again right here. But within this opportunity in here, you have this low resistance liquidity established with a low, a higher low, a higher low, a higher low, never making any effort to run on anything. And then when we run above the buy side right here, failure to close above it. And then if you go to your higher time frame, a little bit higher as well, so go to a 15-minute chart here. Throughout all this action, there's no displacement taking place. There's no inefficiency created. So the only inefficiency here is right here on the 5-minute chart. So I think it's still a reasonable entry that you took right here, and it's fine to accept the loss on it. But allowing for this retracement to occur, when you see that it is still respecting the framework of the day to go higher, you can find another opportunity to be a participant later, okay? Even using the same inefficiency. Price returns back above, it's back above, and then starts respecting it once again here. And you can find another opportunity to be long and reach for your target. Just like Carson said, if you have started to gain some experience in the markets, then you can understand when the framework is still in your favor and you can look to be a participant again. And here too, within this, if you're seeing no inefficiency created on the higher time frame, so we saw nothing on the 5-minute, price runs out the high here but doesn't close above it, you can wait too and see, allow price to trade into this, and then give a second to see, are you getting any sort of new displacement to the upside? You remember, the entry is not the most important, but the framework itself. So if you allow yourself the opportunity to see if you're on sides with order flow, you can mitigate a lot of opportunities where you may have a losing trade within here. So go down to the 1 minute when price trades into that inefficiency right here. And see, are we creating any new displacement to the upside when that happens? Well, we start trading up here into this civvy and then just trade lower. So there's no BISI being created. But utilize those higher time frames too, like your 15-minute, your 30-minute, your 1 hour, and see if you are getting any new displacement. That'll give you a good indication of if the expansion can continue or if we need to see a return back into the range first. But right idea, and it's good to see you had the right framework. Sometimes it just comes down to the timing of things. So good. What's that made?
If you want, Henry, do you want to? You can go into it, or I can go into it. Doesn't matter.
Yeah, I can go into the new one. Okay, so the new one's pinned here now. Okay. So the exercise for this week isn't going to involve any actual trading. It's going to be more of a preparation exercise and helping with understanding, do you really have something clear that's helping you participate in the markets? Because whenever we come to the markets, we need to have a full understanding of how we're going to participate if we choose to. Are we using the higher time frame bias? Do we have a model to engage in the market? Do we have a proper plan around risk management and trade management? You need to have each of these things before you look to participate. If you're not planning, what's the quote, Carson? You know this one. Prepare
if
to,
you, if you fail to prepare to fail.
exactly. So you need a plan coming into the markets. This week, the intention is to do some reflection, go back into the charts, find some examples, and create, if you don't already have one, a firm plan for yourself that you can use to approach the markets each week. So this week, no executions, no real-time trading. You're just going to submit your full trading plan. Okay? So this should include, if you're trading with the higher time frame, what sort of analysis are you doing across the higher time frames? What's your lower time frame analysis? Are you using those midnight and 8:30 opens, for example, to shape the daily framework? What are you doing in terms of the weekly profile? What point of interest are you utilizing? Are you someone who trades off of higher time frame inefficiencies or order blocks? What times do you trade within? Is it your model to just trade the silver bullet, for example, and you only trade between 10 and 11 or 2 and 3? Or do you like to trade the lunch macker and find the retracement on stops trailed prematurely ahead of lunch? Whatever that is for you, identify the time windows where you like to be a participant. Even if it's just the kill zone itself, like, are you a London trader or do you trade in New York? What is the exact entry model that you're looking for? So if you don't have a firm way of something that you see and helps you get into the market, that's something you should work to establish. And you only need one PD rate for that. Okay, like it could very well just be, I look to enter inside of a fair value gap. Okay. Risk management. How are you managing your account? What is your plan for how much you're going to risk on a trade Does that change? Does that amount change between different types of trades, or are you consistent with it? How are you looking to mitigate risk when an opportunity is not necessarily playing out ideally as you like? Think about all those things in terms of your risk management, and then trade management as well. So how are you going to take partials? Where are you planning to take your profits? Are you looking for liquidity or inefficiencies? Is that? Are you taking partials at the 50% of a range? Whatever that is for you, make sure you account for all of those things. And then your reflection process. How are you going to journal afterward? What data are you including? How are you going to think about the trades you took and practice your self-awareness and learn from the opportunity? And then anything else that you think belongs in your trading plan, make sure to include that as well. And then we want you to go back into your charts and find 3 examples of where all of this aligns and it makes sense for a trade for you to take. Find 3 examples of that, annotate the charts, and share them with your trading plan. Okay. And this is going to be great because it'll provide an opportunity for folks who, if you're brand new and you don't have one yet, we encourage you to start developing one and use this as a practice for that. If you have been doing this a while and you have a set plan for yourself, please take the time to share it as well, because this is an opportunity for people who are newer to learn from others as well.
I'll also add too, the 3 examples that you submit should be within the past 30 days.
Yep. Any questions here on this week's exercise? Sounds really helpful. Awesome, Sarah. Yeah, so not every exercise that we do, I think we've done a couple of these across the last 24 exercises that we've done. Not every week is going to be around trading. You have to have a plan for entering the markets before you can be a participant. And having something that is set, having an idea of how and when you're going to participate is going to be totally game-changing for you if you don't have something already, because it's going to help you avoid so many of the emotions that come into participating without a firm plan. You don't have to have FOMO of missing a move that's outside of your set trading hours. Right? You don't need to worry about not taking the right size or whatever when you have a risk management plan intact. All of these things are going to help you participate with a lot more confidence and readiness when you come to the market. Aiden, this is going to be challenging. I trade many models. If you have different entry models, that's fine too. But if you have multiple of these, feel free to post all of them in there. But the more practice and preparation, the better. But just make sure that you have something. So that's fine, Aiden. No worries. Abdul, I'm following firsthand, but I never did an exercise. I can start from this week. I don't know why I'm not doing it. Yeah, take your time to engage in them. You're not going to, none of this is going to hurt you in any way. It's only an opportunity to improve and learn and reflect and grow through it. So take the time, do it, be vulnerable. I know sometimes we can be a little bit tougher. Like this week, we've been gone a little bit deep into some of these, but trust in the fact that it's for your benefit. Nothing that we ever share or say on here is done in a way to push anybody down. It's only to help everybody grow and learn. And coming on here to be vulnerable and make these submissions is going to help you, and it's going to help the community around you as well. So we really appreciate you participating and making that investment in yourself.
All right, I got one last thing to wrap up the call for the 17 individuals that are on here, and for anyone else who makes it to the very end. I want to give 1 minute. I want everyone to go grab pen and paper or something to write on. We're going to write one simple thing going into this week. We're going to write it on paper. We're going to put it into the real world. I want everyone on this call to let me know when they are ready. I'm going to wait for every single one of these individuals on this call. I want them to let me know in the comments right now when you have a piece of paper. And we're going to write one simple sentence down. And we're going to take this into our trading and into our life going into this next week and further on in the coming months to years. So once everyone has something to write with, Aiden's got it, Terry's ready, Bob's ready, Sarah's ready, Ricardo's ready, Kate's ready, Pablo's ready, Florine's ready, Henry's going to get one. Parker, I know you're in your room right now. I need you to have pen and paper in your hand. Yeah, I called him out.
One.
All right, Parker's ready. Arish is ready. All right, you ready? All right, we're gonna write one simple sentence. Right? We're gonna write one simple sentence, and I'll talk about it. We're gonna write, I will not let pain have a voice. Right? I will not let pain have a voice. Let me know when everyone writes it down and I'll talk about it for a second. I will not let pain have a voice. I will not let pain have a voice. Everyone got that? Everyone got that? I will not let pain have a voice. Why will we not let pain have a voice? Here's the thing. When you're going through this thing called trading and you're going through this thing called life, you're going to have these thoughts. Maybe trading isn't for me. Maybe I can't do this. Maybe it's too hard. Maybe I don't want to. Waking up early in the mornings, staying late at nights. This is not for me. I can't. It's too hard. I can't do it. No matter who you are as a person, no matter how strong you are, no matter how strong-willed you are, we're going to have these thoughts. And these thoughts are simply just thoughts. But the second you give weight to these thoughts, and the second that you give your pain a voice, is the second that it then transpires and manifests itself. Right? So if you constantly give weight to this voice in your head that says that you can't do this, or you shouldn't do this, or you know, all of these things, we all know what thoughts they are. They're all going to be different a little times for every single person. Maybe I can't handle this. Maybe I can't handle my job with trading, and I can't do all this, or I can't get in shape, and I can't start going we're all going to have these thoughts. They are going to be there. It's just how well do you shut them down? Because the more voice that you let it have, it's going to amplify into real life. And so this week and going forward, I want all of you guys, and I'm going to encourage and challenge you guys to not let the pain that you have in your head have a voice. Because the more you allow it to talk to you, the more you will allow it to take over you. So going forward, the second you have that thought come up in your head, you are not going to give it a voice. It does not have a voice. It does not own you. It does not decide what you do next, right? I have studied and I have read countless books and I have listened to so many podcasts. And if there is one thing that separates the best in the industry, in whatever industry, whether it's sports, trading, business, whatever the case is, there's one glaring outlier. It's that people, when they do not want to do something, they still do it. That's the clear separation. I'm not going to lie. There are so many times in this world of trading where I don't want to go and I don't want to journal. There are times where I don't want to get up and I don't want to do this, or I don't want to do that, or I don't want to sit there and I don't want to maybe I want to just spend my Sunday morning to myself and I don't want to hop on the Sunday call or whatever the case is. There are so many different areas in my life where there are going to be days where I don't want to do something. And the simple outlier and the gap that remains between you and the person that you want to be is the fact that you will still continue to do the thing even if you don't want to do it. And the reason why people do things that they don't want to do is because they do not let their pain have a voice. Their pain does not have a voice. So even though it is there, it does not have a voice. It does not have a direct influence on what they do. So if you are wanting to go somewhere in life or get somewhere or go to that next level or become that next trader, you have to realize that you are going to have to do things that you do not want to do. And if you do not want to do that, then your pain will have a voice. But if you decide today and every day going forward from today, I'm not going to let that pain have a voice. It does not control me, right? Going forward, you will know that just because you feel a certain way does not dictate whether you should or should not do something. The only way it dictates it is if you let that pain have a voice. So I encourage you and I challenge you going forward this week to not let that pain have a voice. When there's something that comes across your radar and in your mindset of, man, I don't want to do this, right? When you're sitting there and you're laying in bed in the morning, or you're sitting there and it's, a certain time and you don't want to do something, guess what? Go and do it. because the more you don't do it, the further that gap is between you and me, right? You can sit there and you could go to bed early, or you could sit there and you could sleep in, and all that's going to do is that's going to separate the gap between yourself and me and where I'm going. And I'm not saying to compare yourself to me. Me could be anybody. It's going to be that next trader. It's going to be that next person. It's going to be the person that isn't letting pain have a voice. So when you're sitting there and you're confused, and maybe this isn't for me, and maybe I can't sit here, and maybe I can't do this, maybe it's too confusing, there's too many words, there's too many acronyms, there's too many abbreviations, there's too many models. Why are you letting pain have a voice? You're just going to create an excuse. And then guess what? Just because you want it, guess what? Just because you want something doesn't mean anything. Because guess what? The second pain gets in your head and that voice starts to get louder and louder, you're going to figure out and create excuses as to why you shouldn't do it. But if you're committed to getting better and you don't let pain have a voice, you're going to flip the excuse and saying, you know what? That excuse is what 90% of people do, and I'm not going to use that excuse. I'm going to use it as an amplifier to make sure that I still ensure that I do it, because that's going to separate the gap between me and him, or me and her. So yeah, sure, go ahead, sleep in. Don't study that video. Don't go back test for a couple hours. Don't do this, don't do that, because all that's going to do is that's going to separate the gap between you and someone else that's willing to do it. So I encourage you, right? Don't let pain have a voice. You get to decide. No one else gets to decide how big that voice is. We all hear it. We all know it. Everyone on this call can understand what that is and what that sounds like and what those words are. And the second that they come into your headspace, how do you amplify it? Do you shut it down and shut it out? Or do you allow it to take over you? So, I appreciate all of you guys. Happy Sunday. Enjoy your week going forward. Don't let that pain have a voice. Do the things that others won't to get what others don't, and you will continue to find success, right? Why do we get confused? What is confusion? If you ever look up the actual idea of what does confused mean, confusion means the brain is about to learn something. So if you are confused in any area of your life right now, don't take that as a negative sign of maybe I should stop because I'm confused. That is the direct thing that should tell you that you need to continue to push forward, because that shows you, and that should be the signal tipping its hat to you that you are about to learn something. If you just keep going, just keep going. Other than that, I'm all there. I'm all good there. Appreciate you guys. Happy Sunday. We've got a really good, fun, insightful week of trading ahead of us. Hopefully last week was insightful. Hopefully you learned at least one thing. Hopefully you got at least one insightful thing out of the community, whether it's the live calls or the trading exercises or the midweek reviews. We're going to keep on showing up. We're going to keep on keeping on. At the end of the day, it's on you. Other than that, I'm all good. Henry, anything else? Any last touching words before we wrap up?
Oh, good. I think that's a great place to end it. We've got a good week ahead. I'm ready to learn, ready to grow.
And I did not make you guys write that down just to crumble it up and throw it away once the call's done. Keep that on your desk. Let that sit there. Wherever you are right now. If you are typed it on your computer or whatever the case is, pin it to your home screen. If you wrote it down, keep it on your desk and let that just sit there all week. Let that sit right next to your keyboard. Let that sit on your desk all week. And just let that run across your eyes when it does. There you go. Appreciate you guys. Enjoy the rest of your Sunday. Be safe trading this week. If you have any questions, comments, or concerns, you know how to find myself and Henry. We are super appreciative of you guys. You guys are why we do what we do, and we're going to continue doing what we do because we know where you guys will go and how you guys will grow. So, other than that, I'm all good.
All right. Recording will be out this afternoon if you join late, or for anyone who's watching the recording themselves. We'll see you in the Discord. See you tomorrow morning. Back to morning chart and chat tomorrow morning, and let's have a great week.
Peace.